Lindsey, this is a market that didn't get off to a great start over the course of the last week. Are you worried at all about 2022?
Yeah, I mean, the first week of January was a little bit rough, but we did get that Santa Claus rally. So I think investors are kind of reassessing their risk as they enter the new year. And that focus really is on those rising rates and the Fed's plan to come off their easy money policies that they've been on over the last 2 years. So I think investors are really focused on that. The first half of the year could be a little bit choppy while we try and figure out those two big uncertainties. But I think when you look past that into the second half of the year, there still are a lot of positives underlying the economy. We have a really strong consumer. We've got earnings growth that looks reasonable and could be beat. And valuations have come down quite a bit, even though they're still trading at a premium versus historical prices. That could be okay if interest rates don't get out of control and inflation does begin to subside. And then finally, the third and final thing that I'm looking at for the outlook is really that while the Fed is removing liquidity, corporations are putting liquidity back into the market with their spending through capex, buybacks, and dividends. So that could be something that a lot of people haven't really thought about in the year ahead.
So if that's the case, Lindsey, what parts of the market are poised to benefit the most from that corporate liquidity being injected into the system? Is it still going to be those mega cap companies that buy back billions and billions of their own stock, like Apple and Microsoft and others? Or is it going to be on the smaller cap side of things as the economy continues to try to recover?
Well, I think you're going to see a dichotomy of both, okay? What we have seen so far is that those big mega cap companies like the financials and the technology, the higher growth sectors, the companies with really strong and reliable cash flow, they are already starting to commit to bigger buyback programs and higher capex in the year ahead. And we would expect that to continue. But I think this is a real opportunity for the smaller cap companies, too, that have been able to continue to have cash on their balance sheet because they took advantage of the easy money programs at the beginning of the pandemic. And I think they have that opportunity as growth begins to pick up. We get out of this pandemic stage and into a new normal, maybe returning to the old normal where people are getting out and about again. The small cap companies will have opportunity.
Lindsey, can the U.S. consumer, saver, investor at all stomach multiple Fed rate increases this year?
Look, I think they can, but they have to come at a steady pace. They can't come super fast. In other words, the Fed, if they raise every meeting at a very quick pace, then the stock market is going to wobble and it's going to underperform. But we have seen versus history, if they are if they're thoughtful and they are communicating their plans and they're able to raise rates at a stable pace, then the market can do just fine. Even if there's a little bit of rockiness and volatility around that first rate hike, we can still see a positive end to the year from a price performance perspective in the market.